to ensure that everyone still understands a few concepts. Just a brief example, we have purchasing an asset for cash, and this obviously additional equipment. With my laser, additional equipment from suppliers, that's for 4,000 rand. Immediately paid 4,000 via EFT. Every time you see EFT, immediately think of bank. So there we go. Here we bought equipment, so it increases equipment by 4,000 rand. So an increase in equipment of 4,000 rand. And how do we buy the equipment? Through cash. And how does that affect our cash? It decreases our bank. So when I have bank, when I have a credit of 4,000, and a credit, when I put on the credit side, because it decreases on the credit side, 4,000 plus minus plus minus. The same concept here. We already did these examples, so just a quick run through so you can understand. So let's go into the actual questions. So here, please remember, guys, if you guys are still not too sure how the T accounts work, please do go back and revise on T accounts. Okay, T accounts if they're called general ledgers, because once you do understand the general ledgers, you will understand the accounting cycle. So remember, assets plus minus, increase on the debit, decrease on the credit. Income minus plus, increase on the credit, decreases on the debit. Expenses, increases on the debits, decreases on the credit. So it's a plus minus. And then you have liability, sorry about that. So liability plus, it's a minus plus, increases on the credit, decreases on the debit side. Hope everyone understands. And let's go into these transactions. The owner invests a further 6,000 in cash in entity. So the owner, as you can see here, the owner, and when you immediately see an owner, what do you think of? You have to think of capital. Invests a further 6,000 in cash in the entity. Alright, so here it's just a simple T account. This is gonna be, when I have bank, because they invested cash into the account, and then we have capital. Remember, bank plus minus, capital is a minus plus, because it's under equity. Remember, the accounting equation is assets equals liabilities plus equity, and capital is a equity. So here when I have 6,000 cash, so increases by 6k and increases the bank by 6,000 rand. So there we go. Bank 6,000, capital 6,000. So let's see how the answer looks. Okay, so this is just the balances that they gave us July 1st, because remember it runs throughout the whole month. So these balances, you just jot down the balances: 2,000 for furniture, 8,000 for equipment, 6,000 for receivables, 4,000 for bank, 10,000 for payables, 10,000 for capital. So remember, our first transaction, it increased our bank by 6,000. So we have an increase by 6,000. Increase by 6,000. And 4 plus 6 will give you 10. And then what happened next? It increases our capital by 6,000. So it increased our capital by 6,000. So that's why we have 10 plus 6 is 16,000. There we go. Okay, now let's get back to it. Transaction number 2. The owner invests, supplies additional equipment to the value of 20,000 to the entity. So the owner, there we go again. The owner supplies additional equipment to the value of 20,000 to the entity. So the owner, as soon as you think of owner, you see owner, you think of capital. supplies an additional equipment to the value of 20,000 rand. So there you go. So the owner, you made it think of capital. So it's going to be my pen. It increases by 20,000, 20k, and then you have equipment. Equipment is an asset, so it's a plus minus, and by 20k. So, and there we go here. Let's see it now. So it increases our capital by 20k, that's under equity, and it increases our assets by 20k. So there we go. Equipment 20,000, 8 plus 20 will give you 28. Increases assets by 20k, and then owner's equity was increased by 20k. So 16 plus 20 is 36, so 20,000. So let's go into the new furniture. So the value of 1,000 is purchased on credit. So new furniture is also an asset, plus minus. It's increased by 1,000. You have 1,000 furniture, increase 1,000 on credit. Now remember, when you see on credit, you immediately think of payables, and credit is a liability, payables is a liability. So it's going to increase our furniture by 1,000, furniture 1,000, and then remember payables is under a liability, so it increases by 1,000. A is equals 1,000, liability plus equity equals 1,000. So the accounting equation equates to each other. It equals each other. So let's go into it. An amount of 2.5 was invested to a payable, was paid to a payable per EFT. So the amount of 2.5 was paid to a payable. So if you see an amount was paid, we paid 2.5 to our payable per EFT. Remember, when you see per EFT or just EFT, you immediately think of bank. So here it basically says that we have paid our payable 2.5. So we used cash, we used 2.5 to pay off our payables. Remember, bank is an asset, so it's going to decrease our bank by 2.5, and then it's going to decrease our payables by 2.5 because we're paying off our payables. So you're going to have a minus 2.5 under bank because we're using cash to pay off our payables. Payables are under liabilities, so it'll be a minus 2.5 for liabilities. So minus 2.5 for assets, minus 2.5 for liabilities. And then we go into the services rendered for cash 4,000. Okay, so services rendered. Remember, services rendered is if I am a company and I render a service for another company. Sorry about that. So let's say I'm a painter, like I own a painting company, and then UJ hires me to paint their buildings. I'm offering a service to UJ of painting, so that's gonna pay me for the paintings I have I've done for UJ. So that's services rendered. So I basically rendered a service to UJ, so I must get 4,000. That 4,000 is recorded as income, right? And it's cash, so it's gonna increase my bank by 4,000 and increase my income by 4,000. Income falls under equity. So let's see how it looks. So we have 4,000. Services rendered by 4,000, so it increases our bank by 4,000 because we've got 4,000 cash, and also increases my income by 4,000, so it's under profit. Increases by 4,000 rand. It's income. It's under equity. There we go. 4,000. Sorry about that. And then we go to receive an EFT payment from a receivable from a receivable 3,000 rand. So we received an EFT payment from a receivable 4,000 rand. So as soon as you see EFT, immediately think of bank. Okay, so because we received EFT payment, so we received money from our receivables. Remember, bank is an asset and receivables is an asset because it's money that we are supposed to receive from a receivable. So this increased our bank by 3,000 because we are supposed to we received a payment from our receivable. So it increased our bank by 3,000, and then now it's gonna decrease our receivables by 3,000 because our receivables has been decreased. We received a payment from our receivables, so it's decrease our receivables. So decrease by 3,000 minus 3,000 plus 3,000 bank minus 3,000 plus 3,000 give us 0. Doesn't affect our liabilities, so 0. Doesn't affect our equity, which is give us 0. Okay, and then we have services rendered on credit to the value of 6,000 rand. So remember, services rendered, that is in income, in profits, so it's under equity. So we're gonna received rendered services rendered on credit. So we basically painted UJ on credit, so we did not receive the money as of yet. We are still yet to receive it, so that is to be considered as a receivable. So UJ is going to be one of our receivables because we rendered a service on credit. So that's gonna increase our income by 6,000 and increase our receivables by 6,000. So here we go with receivables 6,000 plus 6,000, and then under profit, under equity, which is income, it would increase by 6,000. There you go. Let's go back to it, and we have July 30th transactions. We have 1, 2, 3, 4. We have 4 transactions here. So we paid we have 3 transactions. I mean, we've paid 3 expense items. We paid salaries. Obviously, here it shows that we paid cash, so it's gonna affect our bank. All these transactions will affect our bank. So we paid salaries 1,000 rand, so it's gonna decrease our bank by 1,000 and increase our expenses by 1,000. So it's gonna decrease our profit, I mean, by 1,000, because an expense, it decreases our profit, and obviously expenses are under equity. So it decrease our bank by 1,000 because we paid salaries, decrease our profit by 1,000 because we paid salaries. And then same thing applies for electricity. It's an expense, so decrease our bank by 200 and decrease our profit by 200, minus 200, minus 200. Sundry expenses, same thing, decrease our bank by 700 and decrease our profit by 700, 700, 700. And as you can see, these are the totals at the bottom. And that should be it for today. Short lesson, as we're just covering the answers and just doing a little bit of revision to understand, concepts, and ensure that we are fully capable of doing an accounting equation in test 1, test 2, or test 3. Thank you guys. Hope you guys enjoyed this recording. And yeah, accounting is not easy, it's not hard. You just have to sit down, put your mind through it, and you'll be just fine. Thank you guys. See you in the next session.